Hello, investors. Welcome to another edition of 18 Minutes with 180 Markets. Friends, confusion, chaos, certainly right now, that is the state of markets. But us as astute investors, and a little bit like Warren Buffett, where there's confusion, there's also opportunity. And that's why I'm so excited today to be joined by Merrill, the new, or I should say, the recently appointed MD of Hexagon Energy Materials, because Hexagon, as well as the market, sounds a little bit confused by investors right now. And here to tell all about the story and why it is so exciting, especially as a clean energy play for the next 5 years. Merrill, welcome to 18 Minutes with 180 Markets.
Thank you, Greg.
Hey, Merrill. As I mentioned, Hexagon has a lot of ways to win in the clean energy revolution. But can you just in a couple minutes talk about the business?
Sure. So Hexagon has two parts to its business, and that I think is what you're alluding to in terms of confusion. First of all, it's in future energy, and secondly, it's in future energy materials. And I can come back to why we're so positive about those two aspects of the business moving forward, the huge growth in those markets and where they'll serve essentially global transitioning of energy. So from a clean energy perspective, we're in clean hydrogen, and we're in what I really want to make the point is that we're into commercially and economically viably moving towards green hydrogen production, but initially being in blue hydrogen. And you say, oh, what's that all about, Merrill? Why, how important is that? Well, there's a lot of debate around the hydrogen sector and how it's going to take off. And from our perspective, we're working on being a producer of what's called blue ammonia. Now, so ammonia plants, there are around 500 ammonia plants around the world. What we're trying to do here is use carbon capture and storage in conjunction with that proven technology. And by carbon capture and storage, we're talking about compressing the CO2 that's produced during the process and geosequestering it into depleted gas fields. And for us, what's really important about that overall business model is that if you compare it to, say, green hydrogen production at the moment, it's a far more cost-effective production approach to decarbonising, right? And I can go through the economics of green hydrogen anytime. But in addition to that, we also have a really great portfolio of ground holdings of assets in gold, near Halls Creek, the historic gold production area, and in graphite, nickel, copper, and PGEs. Now, just to put the market context in there, well, of course, graphite and nickel are really crucial in lithium-ion batteries, and from a performance, energy density, and a whole range of other aspects. And then PGEs are used in electrolyzers, and so are also in demand. So we have this project called the Macintosh project, which the company which I joined late last year, has done a lot of work in graphite. And the thing about the graphite market is that it's very much about the end user, the end product, and the selling of that into predominantly Chinese customers. So the quality of that product and how to market it, we don't have that expertise. We got so far with that project, and we did a lot of drilling, and that's great. I'll talk about that in a minute too. But where we're really focused for Macintosh is in nickel, copper, PGEs. And I think I mentioned to you earlier that yesterday I was down in our warehouse, which has got the drill core from all the graphite work that was done, which was never analysed for nickel, copper, and PGEs. And that piece of drill core has got sulfide mineralisation, and it's got a lot of shiny bits in it. And we've actually corded some of that core, and we've got it off for analysis. So we put an announcement out last week which said Macintosh, in terms of nickel, copper, and PGEs, is in the right location. It's already got historic drill intersections of PGEs, and we already showed and had made public in a very long time ago that during graphite drilling there was mineral sulfide mineralisation encountered, and that we were getting that off for sampling. And we've got a drilling program coming up. That's really exciting. So I think in a nutshell, that's who we are, and where the confusion comes in is future energy materials and future energy. How does that fit together? How do we message that? Well, I guess the most important thing is that we're trying to be at the forefront of modern companies and the modern way of thinking about things in emerging markets. And we're trying to put that logic together in a way that people understand it.
Great. Hey, Merrill, why don't we start out with the hydrogen? And, certainly with your background, can you just tell us a little bit about, you're not a Johnny come lately to hydrogen. Can you just give us a little bit of your background?
Yeah, sure. So, and I'm not a Johnny come lately to hydrogen. And I think that's
Exactly.
a really, really important point, Greg, because hydrogen and people trying to work in hydrogen is not new, right? So the history, which people often don't cover because there's such a lot of focus on green hydrogen, which is one way of producing hydrogen, doesn't go back as far as, say, World War II, where hydrogen was being produced by the Germans they used hydrogen and then turned it into synfuels, which is another end product, not just hydrogen gas or hydrogen liquid, for use in aviation and in heavy vehicles, right? So, and then you've got Sasol, Sasol is obviously a South African company that's been into hydrogen technologies since apartheid, right? So there is expertise globally around where hydrogen fits, and hydrogen is a core building block for, say, ammonia, which is ammonia, of course, is NH3, so you're basically adding nitrogen at the end of the hydrogen production process, and you can do that irrelevant of the hydrogen production process and whatever raw material you put in, whether it's coal, which people don't like to talk about too much, but it is a very, very commercially viable option and can have, through carbon capture and storage, can actually be decarbonised through gas, natural gas, and then, of course, green hydrogen, very sexy, I must say, which is essentially using renewable energy, or the sun or wind or tidal or hydro, and using water, and basically splits H2O, and you produce hydrogen. And then the problem with that commercially, no problem with it technically, is getting to scale and the costs it takes to get to scale. So, there's some great reports out. Clean Energy Finance Corporation commissioned Advisian Engineering to do a report last year. That's available in everywhere. We've actually put it in one of our announcements. We put quotes from that in our 12th of December announcement about our hydrogen project. And essentially, everyone's trying to get the cost of production of hydrogen, of green hydrogen, that whole electrolysis, which is what I just talked about, down from about $3, let's just say $3.90, they say, but $3.50 a kilogram, down to below 1.5. Now, that's just one thing. But what people don't often talk about is when you get the hydrogen and gas, or if you're trying to get it in liquid format, what it costs to transport that. It is the numbers in that Advisian report are $3.9 or $3.90 per kilogram to produce it, and $9 a kilogram to get it to market, right? Hydrogen is a real beast to liquefy, to contain, to transport safely, and that is there's a lot of great work going on in the world, Greg, around that. But if you're talking at a totally costed figure for hydrogen versus, say, blue ammonia, which ammonia is transported all around the world these days, in the short to medium term, there is a big disconnect. We're going to get there, but people don't often talk about not just the production, but the handling and the transportation side of things. So back to me coming from hydrogen background, I basically got enthusiastic about this space when the oil price was $130 a barrel, which was pre-global financial crisis, and look at where things are heading now.
Right, and, we could get there again.
Yeah, exactly. And I basically looked at what Sasol was doing, and then got in this business, started a company, backed all listed it, and then moved. You're really talking large CapEx projects, and then obviously the global financial crisis hit, and moved through that and into then biosyn gas. So using biomass as a feedstock, and so a renewable hydrogen process. And so, I do have some experience about the challenges around bringing people along for the journey, the complexity of these projects. And what's most important, I think you're going to want to ask me about, I think one of your questions is around what the critical success factors are around what it will take here in Australia for successful hydrogen projects competing in the global hydrogen market to take off.
Yes, that's certainly, and also I think it's important to maybe just bring it together. Blue hydrogen, would you say, is like, in a way, we have to get to the corner to get around the corner, and blue hydrogen is in the is getting to that corner first. Green hydrogen is maybe around the corner.
Yeah, it's a really important point. And also people talk quite often about them being very separate. So I'll just cover that first before fully answering that question. We have done a deal with a large renewable energy company called FRV. Now about 49% owned by OMERS, OMERS, which is a Canadian super fund, OMERS Infrastructure, and they've also got Middle Eastern and Spanish investment in them, and they've nearly done 1 gigawatt of solar energy developments in Australia. So our view is that we can be right from the beginning as green as we can be in blue ammonia by using the renewable energy in the conversion of the hydrogen and the compression of the CO2. So everyone sort of goes, oh, there's only one way or other, and it's not quite the way it is. There's always better. But we definitely are advocates that we will transition to green. We see blue as a building block. It's that whole thing. If anyone listening has been following, say, Alan Finkel in the hydrogen strategy, he often uses the word chicken and egg, right? Around the building of the hydrogen economy globally. I've got to give my customers of a hydrogen carrier, which is what blue ammonia is, confidence of what they're going to pay for that. We can't blow their business model out of the water by that being, 10 times what they're paying for current, because they're already so invested in fossil fuels, and we're asking them to change. It's a really important point. And so I see that blue, exactly, it will build a market that other people will come into as green becomes at scale more commercially viable.
Right. And speaking, I guess, getting more into Hexagon specifically and your hydrogen projects, can you just talk a little bit about Pidurka and also about your WA holdings, because both of them seem incredibly exciting from a hydrogen perspective?
Yeah, that's great. So in May of last year, we started a pre-feasibility study over the Pidurka, or the Northern Territory Pidurka hydrogen project. Now, I joined in October, mid-October of last year, and the first thing was to pull together all of the work by our engineers, our logistics specialists on water, on markets, everything into a detailed financial model, because how that was initially envisaged was potentially a hub at Alice Springs. And of course, because the deposit it's based on Pidurka is actually near there. So we had to model all of these things around logistics for coal gasification, which is what that's based on, which I can go into more detail, but an underground coal mine, and moving material around the countryside, including our end product to market. So we have done that, and we're working on the final stages of pulling all that together. So what did that do for us? It said we want to be in blue ammonia, right? We want to tap into well-established CCS infrastructure. We need to be near a port, and the whole balancing act was also making sure that we have the lowest cost construction, because these plants are really complicated and they have a lot of kit, and they need that transporting that into Central Australia is a big factor as well as transporting product out, or even our raw feedstock out. So we've modelled all of those things, as well as port facilities and water supply, and we will be transparently coming out with the outcome of all that work by the 28th of February. So that deadline is coming very fast. We're very focused on it. But in the meantime, we have identified a number of opportunities. We've got very good networks, and we've said Northern Australia for us is fabulous, right? Because of its renewable energy component for where we want to go with hydrogen, because it's got energy feeds, raw materials in terms of energy feedstock, whether you look at coal or natural gas. And obviously there's differences in carbon emissions related to that. The lower the carbon emissions, the less you have to CCS, the lower the costs for all this sort of stuff. And then infrastructure, got fabulous export, port and infrastructure and access to water. So we've sort of scanned all of that, and we've said, we really like the Northern Territory. Long term, we see some real prospectivity. There's no doubt about it. But short term, we see some really massive opportunity in WA too. So, which is why, so we are very excited. We're working really, really hard. And again, as part of our PFS results, we plan to come forward with the details, but we have made clear in our latest quarterly that we have applied for some ground in Ashburton North, which is at Onslow, through the strategic industrial areas that are managed by the WA government, for us to do a blue ammonia project. And we're in negotiations with a number of stakeholders around how to make that happen as commercially and economically viably as possible. So it's about leveraging off the infrastructure that's there, and particularly in CCS. I'm happy to talk about CCS too, if you'd like me to.
Yeah, but also, can you just you mentioned the infrastructure in WA for hydrogen? Can you just talk a little bit about it, because it is pretty plentiful, isn't it?
Yeah. So this is all about, for example, when we've looked at Northern Territory and we've looked at Middle Arm, which we're very enthusiastic about being located there and having a hydrogen hub. It's still there's about $2 billion slated for upgrading the port for export, and there's another $1 billion slated for supply of water into that location. There's rail transfer stations that would need to be built for us to be doing the project that we contemplated. You flip that over to, say, WA, whether it's Onslow or Dampier. So we're very interested in Ashburton North and the Burrup strategic industrial areas. You've already got port. We've already talked to the local port authority. You've got port facilities that can be immediately used. They're already being used for ammonia. You've got water reticulation. You've got power reticulation. You've got gas pipeline reticulation. For us, if we're going to have a cornerstone around natural gas, we're being very careful, and we'll be very clear about how we do that. We won't be competing with gas for the LNG markets. That's not what we would do. So back to, and then CCS. So again, pipe work that is basically been installed into depleted gas fields, which are clear traps. The Thevenard is a very good example, which some of them are being used, by the way, for reinjection of natural gas, to store natural gas as part of people's production planning. And these are suitable for CO2 geosequestering. There has been obviously some false starts in CCS in Australia, but all I can say is that around the world, in Canada, the US and China, CCS of the sort of scale that we need to tap into and other companies need to tap into is being done technically and commercially viably. And Australia has got this huge opportunity to step up and invest and create a business case that attracts people like us into toll-treated CCS, right? And that's where we're heading with what we've been given offers for how we may be able to participate in CCS programs, which are multiple parties and toll treating of that. And that will be a new business in itself, Greg. There's going to be opportunities created there.
Yeah, no, and before we close off on the hydrogen, it sounds like there are also a lot of upcoming catalysts. You have a PFS in WA. There probably is some more to come. Is that accurate?
Yeah, absolutely. We plan to dovetail those two things. So, because our shareholders' expectations, and we're working very, very hard to that, is for the most economically viable and most risk mitigated and likely to achieve commercial success hydrogen project that we can get away as quickly as possible and to service the emerging global hydrogen markets.
Well said, Merrill. Now, let's turn ourselves over to the other assets within Hexagon, if you don't mind.
Right.
We're going to go over a little bit, 18 minutes, but that's okay.
Yeah, so as I in my introduction, I said we've got great ground holdings. We've got gold at Halls Creek, and we've done a lot of work there in terms of aeromagnetics, geophysical work, and targets. In terms of targets, and we made announcements at the end of last year that the final interpretation of some work from our field, our 2021 field work, actually identified more anomalies than we'd initially thought. So all very positive. And what we are looking at doing there, and we're in discussions with parties, is bringing someone to get on the ground and work with us collaboratively through an earn-in agreement. And that we've put that in some of our announcements to say we're working towards that. That is in progress. So look, I'm excited about that, but it obviously we just got to balance the expectations of our shareholders to bring through things, and it's just a matter of timing. And so, we've got a plan for how we're going to bring all these things to fruition. And I think that one of the key things is narrowing down what we're going to do, narrowing down who we're going to get partners with, and how they will bring money to the table to create value for our shareholders through our portfolio. And our Halls Creek project's a really good one there. So we're very careful about who we're working with. We've vetted people. We're very, very positive about what we can do there. So that's the groundhold we've had for some time, and we need to move, right? Then we've got McIntosh, which in my introduction I talked about, had a lot of money spent on it by our shareholders in graphite. And that is a very specialist market. And we demonstrated last year that we'd been in graphite and we'd gotten so far, but our expertise around the end markets, was not sufficient in terms of being able to sell a product of the quality that people are asking for. And so we got a North American company to be involved in our Alabama project. So South Star Battery Metals is basically Johnny on the spot. They're there, they understand the jurisdiction, and they're already developing in Brazil graphite projects. So they're specialists in that commodity. And I could say that to you, Greg, because we're really clear about who we want to be partnered up with, who can get on with it, bring money through their shareholders to totally focus on that commodity. And it's the same with the graphite at McIntosh. We're working with someone there who's got Chinese connections, and we're looking to get into that. So we are very excited about being able to make clear what our strategy is around graphite, because we can, on a graphite mineral rights only basis, because our focus is getting in and drilling at McIntosh for nickel, copper, and PGEs, because we're in the right location, Greg. I mean, we've got Panoramic up the road, Pantoro. We're doing other companies. This week I've had another company come to me about collaborating, and as I said to you earlier, we've got drill core in our warehouse, which we are now analysing for nickel, copper, PGE. So we're really positive about it, and we've made a few announcements. Even last week we made an announcement about, look, here's historic drill intersections of this mineralogy. Look, we've already announced that there's mineralisation and drill core we hold, and we did a lot of work last year with geochem sampling. We've got 5,000 samples that are with a specialist geochemist, with the anomalies being pulled together. We've got 4 targets that we're planning to do a drilling program on, and it's $1 million in the ground and some further more granular geophysics. And we've built that up from very detailed sort of a review of historic data, geological structural review. It's basically everything that we could possibly do to make sure that we have really got together the best possible program. So that's what we're doing at McIntosh. And I would say to people, look, I know it's confusing to people about clean energy and us being in hydrogen, and future energy and future energy materials. But, they do come together if you think about where the world's going to be. And what's more, we have more than one opportunity for our shareholders to participate in value creation. It's a great opportunity.
Yeah, and that's exactly right. And I think, you absolutely summed it up very well, which is there's so many ways to win, but all the ways to win are based on where the world is going. And that is a structural change for the positive. Hey, Merrill, we do have to try to keep the interview somewhat tight. Do you just have any closing remarks for the audience? And certainly we could do a part 2 at some point as well.
Oh, I'd be delighted to do that, given we've got a bit of news flow that we plan to get out. And I guess for me, it was about emphasising that commercial, economically viable route to market. That's I see very much that's what I'm responsible for shareholders. That we've got great upside, but we also have pulled together what we're going to focus on, and where we're going to bring alliances, technical and commercial alliances, that we'll see also as fast as possible for value creation. So look, I can't thank you enough for this opportunity to reach out to shareholders, and we very publicly, I'm available, and the team in the office would be delighted to answer any questions that come in.
Thanks, Merrill. We appreciate it, and I'm sure we will do a part 2.
Thank you, Greg.
Bye-bye. Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.